Welcome to my daily review. Today is Tuesday, July 22nd, and you're looking at a daily chart of the NASDAQ, which is down 81 points today or 0.39%. And I just got to express some caution in the market because ahead of the big earnings reports from, these big tech companies, the market is cautious. We've had a long run. It's been about 13 weeks, so we're closer to the end of the run than the beginning. So there's a lot of profit taking going on. The Nasdaq pulled back to its 10 today. I just think you have to be cautious in this market. Um, Longer term, I think it's going higher, but we're hitting into a seasonally weak period where, although I'm not big on seasonality, August and September are usually weak. I could see a scenario where, we pull back, maybe even to the 50 here, August and September, and then rip, October, November, December, into the end of the year. I'm not predicting that. I'm kind of expecting it though. And I just, we've had a long run here in this market. Today is July 22nd, and the follow-through day was April 22nd. So it's been 3 months since the follow-through day. And you can see how many weeks we've just been ripping higher here. I'm not going to count them. I'm just going to say, just looking at the market, observing leading stocks, it's very cautious. Uh, there's some profit taking going on. It's getting really defensive. And I'm not just making this up. I'm going to show you why I'm saying this. Anyway, NASDAQ was down today, and we know that when the NASDAQ is down, those large tech stocks are bringing it down. Now, Google. This is one that, was on our ready list and looks pretty darn good here, breaking out of the base and pushing away. Google looks fine. Apple was actually up today, but some of these companies are going to report tomorrow, including Google and Tesla reporting tomorrow. Let me see what else here in the Mag 7. Amazon down a little bit today. Meta Platforms down a little bit today. Microsoft. They're all reporting next week here on next Wednesday, the 30th. Anyway, that's what, kind of drives the indexes. And I'm not interested in the indexes. I think when you want to gauge the health of the market, you look at the leading stocks, you just observe, what they're doing. And I'm going to get to that in a minute. But first, I have to start with this morning's earnings report because I believe, these earnings are really important for longer term sustainable rally. We need, to have a strong earnings and beat expectations. This is Coca-Cola that reported this morning is down slightly. They're going to have real cane sugar, I guess now. General Motors reported down 8%. I would say that's a negative response with heavy volume to their earnings report. A couple of defense contractors, Lockheed Martin reported down 49 bucks or 11%. Ouch, that hurts. RTX, another defensive name. Undercut the 21, closed above it, closed 84% of the daily range. So got some buying there after the initial sell off. Yeah, there you go. Dip, buy the dip, but still, down 1.5%. That doesn't feel good. But at least earnings are behind it. And you can see the, accelerating earnings here, 5% to 9% sales growth, 10 to 11% earnings growth, and they're just, slower moving stocks. Anyway, the housing names reported, DR Horton, not a great report, but had a 17% move, right? Higher than I mentioned earlier how I think these things have bottomed here because these pretty weak reports are being met with buying here. So I'd say that 154.22 would be a buy area here if you were looking into getting into a home builder. That looks like to me like the stage one base, and it's emerged out of that level and into a stage two phase. So DR Horton looks good. I think that's one of the leaders of that group. Pulte Homes reported this morning. That one was up, nearly 12%. Got to look at the weekly charts here. Yeah, breaking out of this stage one base here. Where was this high on this base here? This is well 120, I would say. Yeah, 121. So that one's just emerging here. So even though they're probably a little extended on the daily because of this big move, you got to watch those buy levels there. That old 121.31. Just allow the moving averages to catch up. That one looks pretty good as well. So yeah, I mean, you look at the red numbers down here, you go, God, these things suck. But like I said, markets stocks top when the fundamentals look the best, and they bottom when the fundamentals look the worst, and everybody hates them Speaking of which, well, I'm not going to go there just yet. Did I do? Yeah, okay, I did that one. All right, one last one. You don't tell me that earnings don't matter. This is Medpace Holdings up 54%, $168. What a move on accelerating sales growth. It went from 8 to 9, now to 14. Earnings growth only 13%, no great shakes, but you can see that blue dot break out from this cup with handle pattern. That's a move not to be ignored, Dan. Yeah, look at that move. Wow, all-time highs. That looks fantastic for MedPay. So congrats to the longs there. All right. I'm cautious. And I'm going to tell you why I'm cautious. I'm not claiming, doom and gloom and everything, but we've had a long run. I think you need to protect your profits. If you have profits, don't just sit there and expect these things to keep going to the moon because they're going to pull back at some point. They don't go straight up forever. You've had a good run. You don't want to give it all back. You've probably already given some back. I've got shaken out of some stocks, and that tells me to be more cautious. But I want to look at Netflix, who reported last week. A beat and raise quarter. They raised guidance. You see the accelerated sales growth 13 to 16, accelerated earnings growth 25 to 47. They raised forward guidance. What happened? The stock sells off. It's already priced in. Now it's sliced its 50, and then on Monday it rallied up to it. So I thought today was a pivotal day. And what did it do today? It went down $43 or 3.5%. Now it's well below the 50. That is adios, muchachos. You got to avoid this one. This is one of the leading stocks coming out of the whatever you call it, the tariff, whatever, correction, the 27% bear market. Then we had the Liberation Day, and this thing popped out of a double bottom base, and it's been ripping for 3 months. But this is a leading stock, a leading growth stock. There's no doubt about it. And it's selling off. I mean, so to me that's a yellow flag right there. You got to have some caution. Stuff like this is falling apart, showing some cracks. I know stocks are going to pull back to their 50 every now and then, but this is Spotify once again. Another leader coming out of the Liberation Day somewhere back here. Looks like this day right here. And, just ripping higher for 3 months. And now it's giving some back. They don't report till next week, but, it sliced the 50 today down 4.5%. These are leading stocks that are just showing cracks, folks. So you have to be cautious. And we're heading into a seasonally weak period. I can't be any more clear. Take some profits, darn it. Don't sit there and be complacent in the market because they'll steal your money from you. You just take it from you. That's all there is to it. AMD, now they report August 5th, so they got some time, but this one pulled back to its 10 today and found support and bounced slightly, closed 78% of the daily range. AMD, I like the stock. I own it. I haven't gotten shaken out yet, but I'm one that, I don't have a lot of cushion here, so I don't want to let a winner turn into a loss. So, that's the problem with buying late, right? All right. Anyway, Robinhood, another one that I own, a leading stock, pulled back to its 10 today and found support, closed just a tick above it. If we look at the daily here on Robinhood, yeah, sold off at the open, found some buyers, but these things are looking shaky to me. And it's had a long run, right? They report next week, so you got to expect some profit taking ahead of the print. Ahead of the risk. It's a risk event, and you don't want to have 25% of your portfolio on margin on Robinhood going into an event like that. Take some profits, darn it. You've earned it. This has been a nice long run. Take some profits, buy something nice for yourself or your loved ones. But geez, don't just sit there and think these things are going to go to the moon. It had a big spike on Friday to 113, and that might be it for a while. Anyway, okay, I'm gonna get off my high horse here. Coinbase, another one, another leader, pulling back here to the 10, just like Robinhood, finding support. Same concept here, where it sells off, finds some buyers, and just finishes flat into the close, down marginally 2%. But still, you don't want to give it back. I just I have a hard time giving my profits back. To me, if you double, have a two bagger, you're not playing with the house's money. It's still your money. Whatever you have, invested in any stock, that's your money. It's never the house's money. So get that through your head. Don't let them take your money here on a pullback. Oracle pulls back to the 10. Yeah, it found support, but to me, the next few days are critical here. You don't want to see these software names, pulling back and giving it up, as they say, right? Palantir, another software leader, pulling back near its 10, close a tick above the 10. Let's take a look on the daily chart here. These are a lot of leaders. Yeah, nice pullback and then, close, I don't know, nearly 2% lower. So just be careful, be cautious. If there was a color between yellow and green, I know there is a color. I don't have the color wheel in front of me, but I would change it. I don't want to go full yellow caution flag, you know, tap the brakes. You need to be cautious here and you got to protect your profits and take some off the table and do what the pros are doing. They're selling right now. All right, they're not selling everything. I'm going to move on. Transition time to the gold stocks. The gold stocks are doing great. I put one on my ready list last week. I didn't include them this week. People are just cold fishes when to these stocks, but they're doing well. So this is Wheaton Precious Metals, and you can see it's breaking out of a base here, up 8% this week. I think you'll take that. This is AU. This is the one that I did have on my ready list. Last week had this what looks like a 3 weeks tight pattern, not quite. But yeah, up 9% this week. So this is where the money's going. This tells me that they're being very defensive. Agnico Eagle Mines, another one breaking out of this cup with handle pattern, up 5% today. Up, yeah, 9.25% for the week. That's only 2 days of trading. So this is where the money's going. This is very defensive. ORLA, Orla, Canadian miner. Yeah, I mean, this is where the money's going, folks. Making new highs, up 10%. I wish I did buy that one, but I didn't. I don't own any gold. My bad. Um, yeah, this is KGC Kinross Gold making another new high today. Yeah, this one's up 7% this week. This stuff looks good to me. Just, observation. They're making new highs. I kind of like that. And this is Barrick. This one's just breaking out of a base here. You can see up 5% this week. That one's still actionable. This one's not too extended. 2.7 above the 10. But yeah, man, if I have to and I can find a couple gold stocks, I'll put them on. But not my favorite. But once again, if I go back now to the defensive names, CrowdStrike, made that high of 517, pull back to the 50. It's just squatting here. You don't want to see stocks squatting. You want to see them bouncing. And every time it bounces, they sell off. If I go to like a 15-minute chart here, yeah, look at this bounce here, sold, bounce here, sold. So yeah, you got to be careful out there. This thing's doing absolutely nothing. If you own it, I guess you can hold it, but if it slices to 50, you got to get rid of it. You want to see them bouncing. This is Zscaler. First pull back to the 50, just like CrowdStrike, but they're not bouncing. So this is not compelling to me at all. Palo Alto having trouble with that 200 number, understandable. And then Rubrik, get a lot of questions about Rubrik. People like Rubrik. This thing needs time. It's doing nothing wrong. I know it sliced its 50. You got to expect that. It went from 47 to 103, and I know a lot of people wanted to buy this one and had it on their ready list. Some traders that I know, and I'm just telling them it's not ready. It's not going to be ready for a while. So you could just, kind of avoid it for a while, let it do its thing. It had a big run. How many weeks in a row was it up here? I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, and so it sells off a little bit and pulls back 3, 4, 5, 6. So it's about 7 weeks into a correction, and it needs, maybe 8, 10 weeks, to form the right side of the base here, and we'll see it rally back above the 50. It's doing nothing wrong. It's doing what you would expect it to do. I still like Rubric, but anyway, my word of the day is caution. Please be cautious. Take some profits. Buy something for yourself, for your loved ones. Don't just sit there and be complacent and think these things are going to the moon. Okay, that's my word for the day. Caution. And I'm not going to switch to yellow. I'm going to look up a color between yellow and green and put that on tomorrow because I'm getting stopped out. When you get stopped out of these leading momentum names, like this, that's telling you something, right? That they don't have the risk for the appetite like they did, previously. So that one, it was stopped out in this one. I just, didn't want to let a winner turn into a loser. I sold this one. It was down another nearly 4% today. So that's just kind of the way it's going with these energy names. Pull back here to the 21. GEV reports tomorrow, but I'm getting ahead of myself. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up, except in honor of the great Steve Jobs. I have one more thing, and that's tonight's earnings. And we're going to start with Intuitive Surgical, which reported tonight. Not much of a, kind of muted reaction after the bell, but it's, at least it's not going down. I didn't even look at the report. I'll have more on that in the morning. SAP is a software name, German software name that was down nearly 3% after hours. COF, Capital One, that was up pretty sharply after hours last time I looked. Yeah, 3.5%. Thank you very much. And then Texas Instrument. This not might not be too good for the semiconductors tomorrow. This is down double digits. Yeah, 12% after hours. I didn't look at the report. I just saw the reaction. So I'll have more on that in the morning as well. And a couple of oil and gas stocks, oil and gas and gold. I know people don't like them, but if this is what's going to start working, I mean, might have to switch up my game here. You got to be flexible and adaptive in the market. Range Resources, I didn't see the report. I did see that it was up 3%, so that's a nice positive response. And then EQT reported. I didn't see that. I'll have more in the morning on all those and tomorrow morning. And anyway, before the bell tomorrow, we're going to hear from GEV, which I talked about earlier. This is going to impact all these companies, in this alternative energy space. Constellation, which is trading tight within the base near its moving average. It's up nearly 5% after hours. I do have that one on the ready list. Did I buy it? No. I'm a chicken. I'm just cautious in this market, and I'm not into really, losing money buying stocks at this point. Freeport-McMoRan reports in the morning. APH reports in the morning. We'll see what they have to say. Oh, this one, AT&T, this one doesn't do squat. They report in the morning. TMO, Thermo Fisher reports. Financial, Fiserv reports. Wow, look at that thing's been beaten down. Mr. Cooper, another financial name, reports. Mortgage lender. We'll see what they have to say. Yeah, I think some shorts are getting out after hours, probably saying, I don't want any part of that. Um, no, NEE reports tomorrow. Yeah, 723. That's Next Era Energy. This one's, kind of been basing for a long time. We'll see what they have to say. And also in OC, this one had a big day today. Looked like the data got leaked. They might have reported. I don't know. That's a big move, 10% into earnings, breaking out of a base here. I'll have to look into that. Maybe they did report today. Yeah, maybe they did. Anyway, all right. And then tomorrow afternoon, the biggies, Tesla reports, and then the Internet King, Google, pushing away from the base here. Looks like some shorts getting out. We'll see what they have to say tomorrow. YouTube's been killing it, and Waymo. We'll just have to see what they have to say about advertising, spending, and all that. So anyway, at mcstockcharts.com, we never give up. Thank you for watching.